I wanted to share with you guys why right now is probably the most important time in your real estate investing career. So if you're looking to invest money into a fund, a syndication, into a deal, when you hear people talking about a generational wealth transfer, we're talking about billions of dollars are on the line right now for anybody to take advantage of it. And we're going to do it over at Bell Capital. Love to do it with you. But here's really what is happening that very few people understand. I'm going to break this thing down. Here's the target. This is our target, my target. Real estate deals are made up of two things. Real estate deals this way, there's debt, and then on this side, there's equity. These are the two parts that make up every institutional size real estate deal, really any real estate deal, right? Multifamily apartments. You got debt and you got equity. So typically, your debt is anywhere from 3, 5 to 10 years long on a commercial loan, whatever that is. And then usually on the equity side, and this right here is done at a bank. So you have a bank or Fannie Mae, Freddie, or you have like a life insurance company. This is where that comes from. On this side, you're usually going to have a partner. You raise your money from partners. Usually they're limited partners. So what happens, what's going on right now is you have fund managers or you have syndicators that got money from both sides of these people. They were like, hey, look, we're going to go to Fannie Mae. We're going to get an apartment building. We're going to get a loan for whatever. Let's say they bought a $50 million or $60 million apartment building. Let's go 50. They got 60% of that money from here, right? So out of the $50 million, they borrowed $30 million. They went to a lender, Fannie Mae. They got the loan on a 5-year loan or a 3-year loan. Let's say they bought it in 2020. Let's say they bought it in 2020 because this is happening right now. They bought it in 2020. They went to their equity partners, their limited partners, their LPs. That could have been a pension fund. That could have been CalPERS, we're one of the largest pension funds in the world. They could have went to the Pennsylvania Teachers Pension Fund. They could have went to the Fire Department Pension Fund. You know, the Fireman's Pension Fund for Florida. They could have went wherever. They could have went to UCLA Endowment. You get the picture. That's who the partners are. This is when you hear people talk about the investors. That's what they're talking about. So they'll go here, or they'll go to Blackstone, something like that. They'll go to Starwood Capital. That's their limited partners. So they say, hey guys, 5 years, we'll give you your money back. So these syndicators, these guys, and the fund managers buy this property. They bought 30 million from them, 20 million from them. They promised to pay them back in 5 years. Their loan is expiring in 5 years. Here we are in 2026, right? So maybe they got 5 years plus one. So they've got the opportunity to extend. Over here, they're like, hey guys, we need 12 more months outside of the 5. We know we said we're going to do it, but here's what's going on. The interest rates didn't come down. Jerome Powell didn't lower rates the way that we thought he would. The war is going on. All these things happen where here's what's going on right now. These are two things that are happening. One, the bank said, hey guys, we need the money back. They're calling it. That's it. We're done. You got to get that money. These loans right now are going into default. That's what's happening. So that $30 million, got to do it. The interest rates that they might have got in 2019, 2020 might have been 3, 4%. Right now, those are 6% plus, period. So not only, no, we're not talking about messed up properties. We're talking about institutional, brand new assets, 10 years old, 5 years old. Merchant builders, developers built these brand new, beautiful properties, A-class properties, A locations, and they now can't sell. And they're stuck because now their debt is due, right? Which is what we're looking for. Distressed sellers with great assets. Or that's version one. Debt's due, 3 years, 5 years that went by. They didn't get 10 years. So most of them didn't get 10 years. They got 3 years, but during that timeline, their interest rate floated up to 6 and they can't afford to continue to pay it. They're not making more money. So they got to sell that property at a discount. Or maybe they got a 5-year loan, but during this time, the equity part, because if they went to CalPERS or they went to Blackstone or they went to any pension fund or an endowment fund for a university, they were like, hey guys, because or wealthy family office, they could have been like, look, we see what's happening. This is a problem. We aren't willing to lose any more money of our equity. We need you to sell. Or the equity partner may be a big limit, maybe a big limited partner, right? In the deal, they may have way more money out. and some other asset that they have lent money out to some other fund manager or syndicator, that those other deals may be underwater. And they're going to be like, hey guys, look, what are deals that are doing good right now? These good. They're almost up. Call the fund manager or syndicator and go, hey, look, we're calling it. You need to cash out right now. We need to exit. I don't care what the debt is. You need to do this. They can install that, or they always do when they give you that money. These big institutions, they do that. They install control. If they're going to be your partner, they want to install control. So this now is being called. And what this does here and here, you got them calling it. They want their money. These people want their money. This creates urgency. On who? The fund manager and syndicator that has those great opportunities, because these deals, the real estate's still performing. This is a great deal. The fund manager and syndicators, they probably did a great job. But if the debt's due, that 5 years, they thought they were going to be able to refinance in 5 years, and they can't because the interest rates are high. Or the equity partners are like, hey, look, you can't refinance. The interest rates are high. You're going to have to sell this thing. Sell it at a loss. I don't care. Get us our money back. We have to replenish the funds that we have, the pension fund, whatever it is wherever it is that they're allocating that capital from. This urgency on this group, squeezing them from both sides. Equity wants their money, debt wants their money. This urgency will cause compromise. I think I spelled that right. This is going to cause a compromise in pricing. This is what we're looking for. So that same $50 million deal, that same $50 million deal that they bought, that probably under other circumstances, that $50 million deal over that 5 year period could probably be worth $75 million. Now, if we go in and get this deal, we might be able to get this deal for maybe $40 million, which we call below last trade. That's our target. And if it's truly worth this, we're definitely below the upside. And we also like to buy what's called below replacement cost. So let's say this $50 million deal, to replace this asset, let's say it's a 200 unit apartment complex. It already may have been, in order to replace this deal, it might have been, let's just say 90 million. 90 million of replacement costs, right? But we're getting it for below replacement cost at 40 million. So we might be getting this deal for, I don't know, there was that 50 million below replacement cost. We're getting it maybe 10 million below last trade, BRC, right? And we're also getting it at just stealing the deal, period. Why? Because sometimes the value in an asset that we look for in a deal is a deal that normally would have never sold. Because that's really the $1 billion target right now, multi-billion-dollar target. There's I think we said there's like, I can't remember what, I think it's $11 trillion of commercial debt maturing over the next few years. And there's not a lot of people that's going to be able to play this game. Now, this isn't a mom and pop multifamily deal. This isn't a 10, 20, 30 unit deal. These are institutions. That's who we're competing with on these deals. These are the MG properties. These are True America. This is Avalon Bay Communities, which are now look like they're getting ready to merge with Equity Residential. Equity Residential is another group that we're actually looking at some of their assets. Bridgewater is another one that we're looking at. Bridgewater, one of Brookfield, that was one. So like, there's other big players here, and this is the only time in history, in my career in real estate, that companies like us, the little guy, we can start a fund. We can get our money together and we can go and we can actually steal these assets because these bigger groups can't move as fast. They're not as nimble in the marketplace. So this is the multi-billion-dollar opportunity that Bell Capital is looking to take advantage of. So while we have Fund One, Equity Fund One, you get the opportunity to participate in that if you have at least 200 grand to invest right now and you're interested in hearing what we're doing. I want to have you because this is the opportunity. We are looking for what I like to call, and I write it down, I scribble all over the place. But here's what's valuable to us. We're looking for distressed sellers. To be clear, not distressed assets. Distressed Assets. The assets themselves are still in great shape. These are newer assets, institutional quality assets, cash flowing from day one. Because one, we want to protect our capital. Number one is capital preservation. Number two, deals got to cash flow. They're not. They may be newer development deals, but they're not development deals where they're not full. They're already full, 95, 96, 97% occupied. A locations, irreplaceable locations, best in class assets in one of the greatest cities in the world, which is San Diego County, as well as we're looking at Orange County right now. And oh, by the way, the other side of that is we're looking for properties that we know that there's some appreciation there. We know we can increase the income, increase the rents, whatever it is that we're going to do by taking care of the residents, taking care of the people, making sure that they're well. So we know that we're going to get a lift based on that. And oh, by the way, we want great debt and great leverage. Like I showed you, the debt is not that great right now. The debt market is not great, but that's for them. It doesn't mean we can't get a great asset at a total discount that makes those things make sense for us as a new buyer. They just don't make sense for the current owners. That is the disjointed moment in this marketplace. And it's going to last for a moment. If you miss these moments, you miss the multi-billionaire maker. And I'm building a multi-billion dollar real estate company, and I want to do that with you. And this is the time to be able to do it. The next 12, 18 months, maybe 24 months window is going to be the opportunity that I know I'm going to take advantage of it. And I definitely want to do it with you guys. So Fund One right now is currently open for people that have at least $200,000 or more to invest. You can go to bell-capital.com and you can do two things on the site. You can schedule a call with myself or someone on my team. We'll walk you through the process, answer any questions you have. We don't have any illusions that somebody's just going to invest by hitting a button. Not 200,000 or 100,000 or $1 million. Like that just doesn't exist. Not to me, not in my world. The other side to it is that you can actually hit get started. You can register on the portal. You can have a look at all the fund documents are already done. We're already ready to go. Fund is open and locked, so you can invest today. It's first come, first serve. You gotta already love real estate. You gotta have a great attitude. You gotta be ready to go. And you gotta have at least 200K, 200,000 to invest ready to go right now. But that is the opportunity, guys. A multi-billion dollar window of opportunity, a generational wealth transfer, really a trillions of dollars that is going to be transferred. It has to happen. It's just whether you're going to be able to take advantage of it or not. I will, and I want to do it with you. And if not, man, I see you on the battlefield. Go do something great. But for all you guys out there that said, oh, I want to get into real estate, I got some money, but I don't know what to do, this is the time. I'm here for you. We're professionals. I've been doing this for 27, 28 years. I've been $59 million worth of transactions. I find the deal, fund the deal, manage the deal, oversee the deal, everything. You write a check, you ride along with me, and I promise you we're going to take care of you. That is my promise to you. I'll always do the right thing for my investors. I always have, I always will. And I will be here 1,000% because this is going to be a game changer for my family, and I want to make it a game changer for you and yours by building a big real estate company with everyday people, hardworking people like me, because we deserve the opportunity too. All right, so if you need anything, let me know. I'm here for you. Go to bell-capital.com, give it a thumbs up on this video or give it a thumbs down. Don't be a hater and a hider at the same time, but I wanted to share with you what this next multi-billion dollar opportunity is and how you can take advantage of it or not. But don't say I didn't warn you. All right, man, you guys have a great one today. Let's get after it.